Hi, this is Kevin McSweeney, Portfolio Manager for CI Global Asset Management, talking about the CI High Income Fund with its recent performance and outlook. The year 2021 was a good one for the fund. According to Morningstar, the fund finished near the top of its category, and we beat our benchmark by a comfortable amount. This is due to a few key factors. First, at the beginning of 2021, although risk remained, we felt that our key equity categories of real estate and infrastructure had more room to run, given people taking overly pessimistic views on those sectors and their cash flows. So we kept strong weights in those asset classes, with securities such as the midstream energy company Cheniere and the industrial e-commerce REIT Prologis being two key contributors to the fund's performance. Additionally, we felt that banks would benefit from a likely rise in interest rates. We had a substantial overweight to the financial services sector because of this. With restrained loan losses and rising interest rates, Canadian and global banks registered very strong performance within the fund. And while we were underweight fixed income due to our constructive equity views, selection within the fixed income asset class was excellent, beating its benchmark and delivering positive returns in fixed income, a rarity for most balanced funds in 2021. For 2022, we see a good economic backdrop and reasonable valuations in our sectors, providing an opportunity for further gains from the fund. Many subsectors within real estate and infrastructure are yet to fully recover their share prices from before the pandemic, although we think that the long-term value for these securities is self-evident. This leaves us overweight stocks, notably in the value sectors of financials and energy. We feel our names are at valuations that can do an above-average job of withstanding market challenges such as rising interest rates, inflation, or a pandemic if its severity exceeds current expectations. But in particular, the high-yield bond portion of the fund should differentiate us from our competitors, given that this asset class has much less sensitivity to inflation and rising interest rates, and tends to register reasonable gains in growing economic environments, such as we expect in 2022. With opportunities to continue to provide income and capital gain returns, as well as the durable cash flows from our key asset classes, we feel positive about the outlook and enduring reasons to own the CI High Income Fund in 2022 and over the long term. Thank you. This has been Kevin McSweeney with CI Global Asset Management.